Rand falls back above R17, here's what's really happening. After reaching its strongest levels in almost 3 years, South Africa's Rand has pulled back above R17 to the US dollar, raising questions about what exactly is driving the currency's sudden retreat. According to economists, the main force behind this move is not South Africa, but the strengthening US dollar, driven by major events unfolding in the United States. The end of the 44-day US government shutdown, the longest in American history, means global markets are now preparing for a flood of delayed economic data. Because this data could influence the US Federal Reserve's next interest rate decisions, investors have become more cautious. This rise in global risk aversion has put pressure on emerging market currencies like the Rand. Before the shutdown, markets expected the US Federal Reserve to push ahead with aggressive interest rate cuts, which would have supported the Rand. But with weeks of missing US data and the Fed signaling a slower approach, expectations have weakened. Market projections now show only a 42% chance of another 25 basis point interest rate cut this year. This uncertainty has strengthened the dollar and weakened the Rand. Locally, South Africa had actually been riding a wave of good news. The medium-term budget policy statement brought positive sentiment, pushing the Rand briefly below R17, touching R16.95. This was followed by a credit rating upgrade from S&P Global, South Africa's first upgrade in 2 decades, a major milestone. However, analysts say the upgrade was already priced in, meaning the currency had reacted before the official announcement. And despite the improvement, South Africa remains in sub-investment grade, or junk status, across major ratings agencies. Fitch and Moody's are still due to release their own updates, with Moody's set for a review on the 5th of December. While further upgrades are not guaranteed, both agencies may shift South Africa to a positive outlook, keeping momentum alive. For now, global attention remains firmly on the United States. Investors are awaiting key data on housing, trade, manufacturing, inventories, and the labor market, all of which could influence the dollar and, in turn, the Rand. Back home, focus will soon shift to the South African Reserve Bank, with markets expecting a small 25 basis point interest rate cut. At the moment, the Rand is trading around R17.07 to the dollar, weaker than last week's high, but still stronger than most of this year.